Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 18th of October. So I've seen another good week of moves with the key indices and also the key currencies hitting some more targets and actually really picking up momentum. So we'll jump straight into the analysis and see if we can identify any trades for today or early into next week. All right, we'll start out here with the Aussie USD, and we can see that the continued sell-off from the little mini pullback that we saw last week continued. Today's has been a bit of a reversal, as we can see. We hit a low of 66.50, and it's certainly trying to rally up here at the moment. Like, it's pretty reasonable when you look at it from if you go to a 15-minute chart, we'll see how much action there really was for the day. And yeah, again, we're not quite finished yet. It's still an hour or two before this candle actually closes on the daily. But you can see that we've seen some pretty good action from the lows. And yeah, realistically, it's at a point now where you can see there's certainly a little bit of a problem here for it in terms of what is over here. I'll put a horizontal line so you can see what I'm talking about. You can see all of this peak action here, hitting it. We had about 7 or 8 touches of this level. It found support here as well. This is a level where it could find resistance again. So you're talking about that sort of 66.80 to 67 cent mark. Obviously, we're looking for a reversal at this point. We're still relatively weak, I think. It doesn't really show any signs of turning around just yet. But in order for us to reverse our opinion on the Aussie and start looking for long opportunities, it needs to do a higher high, higher low sequence, obviously, and it hasn't done anywhere near anything that resembles that right now. So it needs to get above this level in the first instance. It needs to get itself back above 67 cents before we start looking at potential long opportunities. But even then, it still has to consolidate and form at least a higher high, higher low on a decent time frame, like say the 1 hour or the 4 hour. You can see on the 1 hour here, it's trying very, very hard to do so. We're about to get a 20-50 moving average cross, and yeah, all it really needs to do is break above these highs here, and then we could look at a potential long opportunity to the previous. You can see here, I'll show you on the daily, it's easy to see, around this level here, around that sort of 67.50 mark, which is where the 20 moving average will be. That would be the pullback that I'd be looking for. But in order for that to happen, obviously it has to higher high, higher low, and close above this level. If we fail here and start to roll over and we see a series of lower highs and lower lows instead, I would be looking for the target that we've got here at 66.20. That would be the target for the Aussie, right back in the middle of this very, very consolidated band that we had for a considerable period of time right through here. So it's going to be a very interesting level for it. All right, we'll move over to the US dollar CAD. Obviously a massive move. Look, the double bottom has obviously completed. We can see that we've got the range from the bottom to the neckline is around the same level as this area here. It hit that pretty quickly. This was a very aggressive double bottom. The CAD just really rocketed up. It had everything. We know we had a double bottom. We had MACD, class B, bullish divergence here as well. And it just absolutely shot through, hit the target. Bit of a reaction at this level, which is no real surprise. We know we've had that before. So it did reach as high as 138, sort of 40-ish. Came back a little bit, but it is trying to rally up again. So look, for mine, if it's going to go higher again, it needs to consolidate above this 137.80. So if we get a close above, say, 138 on the daily, I'd be looking for smaller time frame changes, or any sequence of higher high, higher lows on a smaller time frame, and start logging it in the first instance to the first peak, and then to the previous highs here at around that 138.80 to 139 area. So really, really good trading on the CAD. I know a lot of you caught a big part of this move, which is fantastic. It was a really good pattern, but again, it looks like it's setting up for another decent move up from here. So yeah, good trading on the CAD. If it rolls over here and we start to see a series of lower highs and lower lows on a big time frame like a 1 hour or a 4 hour early next week, I'd be looking for a move back to the middle of this channel and probably the 20 moving average, which will be getting closer at that point. All right, US dollar yen continues from strength to strength. You can see that we've got a 20-50 moving average cross now, and it's still really pushing hard up to around that 150.80. It's really not even that far off our target now. Like, it's obviously a very important zone, because of the resistance and the support that we saw through here. Absolute classic role reversal at that point. So yeah, we're still a handful of points away, but look, this has been a very, very good trade. Very easy to get into too. You can go to the 15-minute time frames, and it's been behaving itself, for a very, very long time. You can see how right through all of the higher lows to the moving averages were perfect. And again, even here, you can see all the higher low sequences back to the moving average worked out really, really well. So it's been a pretty easy one to trade. I know a lot of people have been on it for a long time. Yeah, for mine, the target was already, pretty good for all of those moves that we got from here. This was the initial target, but once it broke through there and tested that level from above, as you can see, it broke through, tested it from above, the things we talk about all the time, then it's ready for its next push up, and that is around that sort of 150, 80 to 90 area. So really, really good trading on the yen. I wouldn't even look for shorts on this one just yet, because it's been so strong that counter trending this one is fraught with danger. So I'd be looking very, very carefully at not probably looking at shorts until it well and truly does a series of lower highs and lower lows on a very significant time frame. And for me, that would have to be probably the daily. I wouldn't even look at it until it does a big form reversal. But up until now, very, very good trading. Okay, dollar index, and again, another one that's gone absolutely berserk. Very similar to the CAD in the sense that it had the big double bottom. This has gone way past its expectation, and realistically, it paused only for 2 days at where what should have been a bit of resistance at around that sort of 102.80 area. It's fast approaching the 104. As you can see, this is another big stronghold for it, though. You can see there's a lot of support and resistance at this point. So it is another key marker. Not showing any signs of weakness whatsoever at the moment. So really, if we see a bit of a rollover at the 104 and we see a series of lower highs and lower lows, the target I'd be aiming for is probably the 102.80, which is the previous, what would have been resistance. But at this stage, again, similar to the yen, very difficult to short something that's got so much strength, because you have to be so precise with your entries. It's not really worth it. But of course, the euro is the one we're going to be looking at trading on when we're looking at the dollar index as the guide. And this one here is obviously a massive, massive sell-off, no pullback whatsoever. If we see a bit of a roll reversal at this level here, so at the 108, call it, if we start to see a series of higher highs and higher lows at a smaller time frame, I'd be looking for this 109 area as the target. You can see we've got these peaks right through here that would give us that confidence. Maybe, depending on how long it would take, the 20 moving average might catch up by then, and it will give us a fib pullback. But that is not an easy trade, and I wouldn't be looking for that. It needs to actually do it on its own steam. I wouldn't be trying to predict the reversal. It must reverse first before you start looking at opportunities to counter trend this. But this has been an extraordinarily big short, and yes, it's fast approaching support again. But there's going to be support every round number now. So realistically, the next big round number is around the 108. If we see a reversal around the 108 and it starts to pick up some momentum on the way up, our target pretty quickly will be the 109 level, which are around these peaks here. So, but don't do that. I would not advise you do that until we actually see a momentum shift and a series of higher highs and higher lows on a meaningful time frame. So up until it, but also the short is starting to get a little bit, dangerous as well now, because there is support right there. So just be careful with this one. Let it prove itself in the direction it needs to go. And then if we start to get that bit of a reversal, then look for that move up to 109. If it continues on and breaks past the 107.80, then we're starting to look at around probably that 107 as the next target, which is around these lows here. I know that's a fair bit more to fall, but it has fallen a lot already, so it wouldn't be a massive surprise, but it would be a surprise to do that without an actual pullback before then. So it's probably where it's heading, but I would like to see a bit of a pullback then. Otherwise, the technicals are starting to, give us a bit more, it's starting to look a little bit dangerous at that point. All right, and the S&P 500, look, not much to talk about here really, other than that it's just ground its way up to a brand new high today. You can see we're in the middle of earnings season. You've got to trade this one with a lot of caution. You want to be really, really careful with how you trade the S&P when we're in the middle of earnings. It's starting to heat up a little bit now. You can see we hit an all-time high again. It's consolidating and hovering around this area. We're only weeks away from the election, of course, as well. So that's all playing an influence on the S&P 500. Very difficult to trade. All-time highs you don't really want to be trading into. Reversals, the only thing I would look for is a smaller time frame change of trend. to the downside. And if we get that, I'd be looking for a move back maybe to the 157 sort of 60 to 80 area, which is around these peaks here, and the 20 moving average. But failing that, I would be probably just leaving this one alone and just watching and seeing what it gives us over the next few weeks. And then when it determines the proper direction, then we'll jump on board. It's a little bit dangerous around this area, so certainly trade carefully. All right, so I hope everyone's had a great week's trading. We've seen some really, really good moves on all of the pairs that we look at, which is great. Hopefully you're able to catch some of those. Have a fantastic weekend. I look forward to seeing you all next week.